Hi everyone, welcome to the first time home buyer crash course. My name is Shikma Rubin. I'm a mortgage lender in Virginia and I'm licensed also in North Carolina. I work for a company called Tidewater Home Funding and we are an ADP REST lender partner. I want to introduce James Allen from the REST program to just say hi and introduce the program to you.
Hello, everyone. Again, this is James Allen. I'm a counselor here with the ADP Real Estate Services Program. And first, I'd like to thank everyone for joining this first-time home buyer program again, and also to thank Shikma with Tidewater for putting this presentation together for you all. Some of you I may have spoke with last week when we was on site visiting. So if I got a chance to speak with you, that's great. And others that I didn't get a chance to speak with, hopefully this presentation and kind of give you some good insight on as far as real estate. And also, as you see on the screen, that's our contact information. So if you have any questions about anything as far as our services, what we do is a free, the REST program is a free benefit for everyone. We basically assist you with pretty much any of your real estate needs, whether you're looking to purchase or sell or both. So we're there to kind of assist you every step of the way and give you that guidance as well. So like I said, I want to take a whole lot of your time. I know Shikma has a whole lot of good material to cover for you all. Again, if you have any questions, feel free to email me or call me or any other counselors there, or visit our website if you choose to enroll in the program. And like I said, we're definitely there to assist you. So without further ado, I will turn it back over to Shikma so she can begin her presentation. And again, thank you very much, Shikma, for putting this together for our associates. And there you go.
Okay, awesome. Thanks, James. Can everyone hear me okay? Okay, so this is just my contact information, just in case you just want to jot it down quickly. It has my email and phone number in case you have questions and you need to contact me after the webinar. I'm happy to assist you with your specific questions. Okay, so let's get started. Is this you? Are you so sick of renting every month and having your rent payments go into what we call a black hole, or you need direction on how to begin the home buying process? You're not sure of how to start. You know, you're thinking about buying, but you just need to know, okay, how do I even begin? And or are you not even sure if you can qualify for a mortgage and you want to know more about your purchasing power? Well, we'll go over. You're in the right place because we're going to go over a lot of information. And it's really exciting because it means that you're thinking about buying a home this year, which is really, really exciting. So we're going to cover a lot in a short amount of time, but we're going to cover every major aspect of the mortgage process. We're going to cover your mortgage payment, what it is, what exactly are you paying for every month. We're going to go over the different loan types and the down payment requirements for each. We're going to go over credit scores. What are the minimum credit score requirements to be qualified for a mortgage for each of the different loan types, and what actually makes up your credit score? We're going to go over a concept called debt to income ratio and what it is and why the lenders care about that. We're going to go over closing costs, what it means, and what exactly you're paying for. And we're going to go over the home appraisal, what it is, why the lender orders an appraisal, and what it means for you. So as James mentioned, the real estate service team, the ADP, offers a special discount for ADP associate. So the discount is, it's $100 cap fees on any lender origination fees, which include the appraisal, the processing and underwriting fee, the credit report, the tax and flood certification. We're going to go over all that when we cover closing costs, but in total, it's a saving of at least $1,250. So we all know that buying a home is obviously a very big investment. So this is just a great opportunity to save money. And because I'm one of the ADP REST lender partners, I am able to offer this discount as well. So it's just great and something for you guys to know about because, like I said, it's just a huge savings to you. So for being here today, I'm also going to send you guys two bonuses. One, I'm going to send you a checklist of all the documents you will need to gather to be pre-approved for a mortgage. And I'm also going to send you a infographic about the upfront fees that you should expect when buying a home. Both those bonuses are just huge help and will get you will give you more information to prepare to buy a home. So let me tell you just a little bit about my clients, Joe and Jessica. They were living in Norfolk. They were just renting and they were ready to put down roots. They weren't sure about the home buying process. They didn't know where to begin. And so they called me. We met actually and went over everything that we are going to go over today. And a few months later, they found their dream home and closed very quickly afterwards. And now they're living in Virginia and really, really happy about that. So hopefully that will be you and soon enough too. So a little bit about myself. I'm an experienced mortgage lender and have developed an expertise with millennials and other first-time homebuyers. I maintain a blog called shikmarubin.com, very creative, and I also contribute to the Virginian Pilot. In their home section, I have a monthly column to address some of the first-time homebuyer questions and concerns. So off to the right, you can see this is one of my recent articles about wedding gift money and can it go towards a down payment and some of the ins and outs of that. I've also contributed to the Hampton Roads Realtor Association magazine and to the national website Redfin. So get your workbook ready. If you haven't printed it out yet, I have the link in the chat box ready for you. If you don't have time to get that printed, no problem. Just grab a piece of paper and take down some notes, and we'll get started. So first thing we're going to go over is your mortgage payment. So your mortgage payment is also known as PITI. I've also heard it being referred to as PITI. It stands for Principal, Interest, Taxes, and Insurance. So what is principal? What is an interest? What are all those things that I just named? So as part of your mortgage payment, you're going to pay for all those things. You're going to pay down your principal, which is the amount that pays off your loan balance every month. And you're also going to pay the interest that for borrowing money to buy this house. So the lower the rate, the lower the payment. That's why you shop your rates, right? So every month, how it works, if you have a fixed rate mortgage, that the principal and interest portion of your mortgage will not change until for the life of the loan if you have a fixed rate mortgage. And every month, you're going to pay a little more in principal and a little less in interest. That way, you pay more of your principal balance every month, and you pay less in interest every month. Next included in your payment is your real estate taxes or your property taxes. That is something that's going to be put into what we called escrow, which I'm going to go over in just a minute because it's one of those terms that gets thrown around and it's not very clear what it means. So you pay your real estate taxes every month and as part of your mortgage payment. The next thing that you pay is your homeowner's insurance. That protects you against any fire, any dangers in your home. It's just like a car payment, insurance payment, just protects your home. And you have to have that as part of your mortgage. Your lender will make you take that out. Also, if you do not put 20% down on your mortgage, you'll have something known as mortgage insurance, and different loans have it structured differently, and I'll go over that in just a minute. So, mortgage insurance, what is it? That's one of those topics I get a lot of questions about, and what it is, it protects the lender from any defaults in payment. The lender is not saying that you're going to default, but if you do not put 20% down payment to buy your home, which you do not have to, which we'll go over in just a minute what your options are, they want to be protected. They want to make sure that there's skin in the game. So they're going to make you take mortgage insurance to protect themselves. So, like I said, different loans have different ways to structure it. And so a good thing to note is that when you're talking to your mortgage lender about your option, ask them, what are the different ways to structure this mortgage insurance? Can we put it in the rate? Does it fall off? Ask those questions, because that is really, really important for you to know about. And as I promised, escrow, the big term. So the way I like to think of escrow is that it's a separate savings account. So every month when you pay your mortgage payment, that taxes and insurance portion is going to go into your escrow account. And we always want to make sure that there's money in that escrow account. So when your property taxes are due, you're not going to get a bill for it. Your mortgage company is going to get a bill, and then they're going to go into that savings account and take the money to pay the taxes on your behalf. Okay, so it's your money. It's sitting there in a different account, and if you ever go sell your property, you'll probably get a check for whatever leftover money is left in that account. So just think about it as a separate account for you, and it's your money. Oh, so get your workbook ready, and the first time home buyer secret is PITI is your entire mortgage payment. And if you are done, just please let me know. Maybe type in the chat box done so we can move on. Okay, great. Okay, so we'll move on to the different loan types. So conventional loans. In conventional loans, you can put as low as 3 to 20% down payment. You often hear that you have to have 20% down for a conventional loan. That is a myth. If you need 20% down only if you are buying investment property, but if you're planning to occupy this as your primary residence, you can, in reality, put only 3% down. You do need Conventional loans do typically require stronger credit requirements. And we'll go over what those are in the next module. But if you do not put 20% down, you will have what is called the private mortgage insurance, but it can fall off when you reach 20% equity in the property. So that mortgage insurance can and will fall off eventually. The next is FHA loan, which is the Federal Housing Administration. They do require 3.5% down payment, and they're known to be a little less strict about credit requirements. They're more lenient about some of those credit issues. So it's a really great program for first-time home buyers. They do have a upfront and monthly mortgage insurance, and that monthly mortgage insurance actually stays for the life of the loan. So that is something to make a note of. Next is the VA loan, which is the Veterans Administration. So if you are a a veteran or if you ever served and you have those VA benefits, you do have an opportunity. The good thing about the VA loan is that you don't have to put a down payment if you do not want to in most cases. And the other good thing is that there's no monthly mortgage insurance on those loans. So it's a really great program if you qualify for it. The next is VHDA loan, which is the Virginia Housing Development Authority, and it's really targeted for first-time home buyers. They really are looking for low to moderate household and so they do have an income limits, like maximum limits that your household can make. So if you meet those guidelines, they have loan programs where you can put down as low as 0 to 5% down, but it's only for primary residents only. So it's, again, a great program for those first-time home buyers living in Virginia. So the first-time home buyer secrets, that there are multiple loan options for first-time home buyers with different down payment options. So write that down because that is really important to know. You do have those low down payment options. You do have different options on how to structure your loan. So you may want to ask your mortgage lender, hey, do I qualify for more than this one program? What are my options? And a lot of it is about your long-term goals and your short-term goal. So if you're done writing that, if you can just shoot me a chat saying you're done, and we'll move on to the next module. Okay, great. So credit scores. This is one of the most that I get the most questions about, and this is what I usually get. My credit score is too low. The funny thing is that a lot of times people don't know what the credit scores are and what are the guidelines for your credit scores to qualify for a mortgage. So for all the loan programs I just covered, with the exception of conventional loan, you need a minimum credit scores of 620 in order to qualify. Conventional loans require a little higher. They want a 660 or 680 or higher to qualify for those loan programs, but the other ones are more lenient and require 620. All lenders do not want to see any late payments. If you have late payments, they want to know why you had late payments. They don't want to see any judgments or public record. Those will have to be paid before the loan closes. So it's really important that you know what is pulling on your credit and that it's addressed in the very beginning stages of the process. So what makes up your credit score? So the most important thing is your payment history. If you make your payments on time, and then your credit scores will be impacted in a positive way. If you make your payments late, it's going to impact it in a negative way. That is the most important thing. I always tell people, if anything else, just make your payments on time. Even if it's just the minimum required, just pay it because you don't want that negative ding on it. The next most important thing is the amount owed. So if you have a high limit on your credit card of $6,000, you want to make sure that you are less than half. I always tell people even a third of that high limit that you can borrow, because that shows to the lender, hey, I can handle the debt and I can pay it on time and I'm not overextending myself. So if you are basically maxed out on all your credit cards, on all your debts, then that may impact you in a negative way. The other things are your credit history, what has it pulled, make sure if you have any collections that might affect your credit history, any new open credits, when you open a new car payment or a new credit card, that might affect your credit score, and the types of credit. We want to see that you have student loans, so you have car payments, or you have credit cards, all those different types of loans are not a negative thing. It just shows versatility. So that's what makes up your credit scores. So first-time home buyer secret, there are different ways to improve your credit to qualify for a home. And that's really important to know. So if you're done, just if you can message me them that you're done, and then we'll move on to the next module. Okay. So the next three modules that we will cover is your debt to income ratio, your closing cost, and your home appraisal. So debt to income ratio, that's a really interesting concept that us lenders look at. And what I like to tell people is, unlike your landlord that doesn't care if you make your car payment on time or what your other obligations are, your lender looks at everything. We want to make sure that at the end of the day, you can still afford your mortgage, but you can still afford paying your car payment, you can afford paying your student loans, that you can at least pay your minimum credit card payment every month. It's really important to us. So what we want, so when can everybody still hear me? I think okay, great, everybody. Let me just go back if just to make sure. I had an electric outage here for a second, so let me just go back and make sure we got everything. So as I said, the lender looks at everything. We want to make sure that you can still make your car payments, your student loans, and your credit card. We want to make sure that everything is that you can still pay all of those plus your mortgage payment. So we want all of that to be below a 43% of your income. So if you take all your debts, if you take that monthly mortgage payment, what you want it to be, divided by your gross income, if it's below 43%, that's a good thing. So the first-time homebuyer secret is just that. The debt-to-income ratio should be at a 43% or less. So if you can write that down, and then we'll move on, and I'm sorry about that little outage. Okay, great. So your closing costs. So that is something that is above and beyond that down payment. It is fees that you pay for the city and state for the recording, to go record your city and state tax, your city and state tax recording costs. So when you go to this to record your deed and your mortgage in the courthouse, they're also going to charge you, they're going to tax you for not just buying a house, but for taking out a mortgage. So it's those fees. You're also going to pay for the appraisal. You're going to pay for the title company and attorney fees. They're going to make sure that you get a clean title to the property. Make sure there are no outstanding liens, that you walk into the property free and clear. You're also going to pay for lender and owner's title insurance, to protect the lender and yourself from any defaults in title, because we don't want those previous ghosts to come out of the woodworks and say that you don't have a clean ownership to the title, and any lender costs. That means origination and administrative fees. The other things that you're going to pay for are the prepaids. And the prepaids are that escrow account that we went over in Module 1. So we're going to collect about a 3 months of reserves for taxes and insurance to put in that escrow account to make sure that there's always money in that escrow account for you. So when those bills come due, we'll have money to pay for it on your behalf. So again, just remember that is your money sitting in a separate account to pay for those things for you. So the first-time home buyer secret, you can negotiate those closing costs contribution with the seller. Actually, you can do that. You can talk to your realtor about different strategies, but based on the different loan programs, they can contribute a certain percentage towards covering those. So if you don't have the cash necessarily, you may need to negotiate that with the seller for them to contribute to that. So that's a really good point for you guys. So make sure you write that down, and we'll move on to the next point. The home appraisal. Okay, so the lender will require an appraisal on the property. What is an appraisal? We want to make sure that the property is worth what is being sold for, that you're not overpaying on the property, that there's not really any value in it. What the appraiser is going to do is going to make sure that they're going to they're going to inspect the property, make sure it's livable. They're going to also compare other houses in the neighborhood and how much they've been selling for, based on the square footage, based on how many bedroom, bathroom, and then they're going to put a value on the home. And that is what the lender is going to loan you based upon. So if the appraised value is, so I often get the question is, what happens if it doesn't appraise? What if it comes lower than the sales price? Well, then you may have to go back to the negotiation table with the seller and negotiate a lower sales price, because the lender will only loan you on the lesser of the two, the appraised value or the sales price. So you may have to go back and renegotiate that with the seller, or you will have to bring more down payment to cover the difference. So that's one. The other thing I get asked is, what if it appraises for more? Well, then you're walking in with equity in the property. So that's a good thing. So like I said, we're getting an appraisal to make sure that there's value in the property, that's safe and livable to live in, because the lender, the collateral is the house, and wants to make sure that the house is you can walk in and live in there. I just went over that. So the first-time home buyer secret is the appraisal ensures that the property is worth the sales price. So I'll let you write that down. Okay. Okay, so you came here today because you are so sick of renting every month and you needed a direction how to begin the home buying process. You are ready to feel settled and control as a first-time home buyer, and we just went over a lot of information, and I hope that you feel like you have that knowledge now to begin the process. So what are the next steps? The next step is to get pre-qualified. What is pre-qualification? Well, it's a 10 to 15-minute conversation where we're going to go over everything that we just went over in this presentation based on your specific situation. We're going to go over your purchasing power. We're going to determine what that purchasing power is. How much can you afford? We're going to look at your debt to income ratio. We're going to look at your credit score. We're going to look at the estimated monthly mortgage payment. We're going to look at the closing costs. We're going to look at everything based on your specific situation. And I often get the question is, well, you know what, Shikma, we are several months away from buying. Should we even get pre-qualified? And my answer is always yes, because you rather know about things ahead of time and months away, that if there are issues, they can be addressed when you're not looking yet, then when you're ready, and then address those issues. So I tell people it doesn't hurt to get pre-qualified. Then we'll know where you stand, and then when you're ready, you'll be able to run with it. So I also want to address that interest rates are still historically low, but they are going up. And that's a good thing because that means that our economy is doing better. So now is still a great time to buy, but just know that the interest rates are on the rise. So again, I just wanted to make sure you heard about this special discount for all those who may have joined us late. The discount for ADP Associates is $100 cap lender fees, and that includes everything, including the appraisal, the processing and underwriting fees, the credit report, the tax and flood certification. It's a total saving of at least $1,250 to you, and I'm one of those ADP REST lender partners so that can offer you this great discount. So take advantage of it because, you know, like I said before, buying a home is a huge investment and every dollar matters. And so, and like James said, this is a free program to you. So take advantage of it. And if you have any questions about it, I know James will be happy to answer it, or I'm happy to answer this part of it too. So I'm doing a special week for ADP Associate to get you guys pre-qualified and on your way. So how to get started, go to shikmarubin.com/ADP. It's going to be from May 2nd to next Friday. I know that you guys are really busy during the day, so I'll make myself available after hours and on weekends, so you can book time to schedule time to talk and talk about your specific situations and needs. So again, shikmarubin.com/ADP, and it's basically a calendar tool to schedule time that works best for you so we can set up a time to talk and get you pre-qualified. So I'm really proud because I have over 30 plus 5-star reviews on Zillow. You can check that out. These are some of my pictures from some of my closings. Some of them are first-time home buyers. Some of them it's their second, third home. Some of them it's investment property. So I'm really proud of all of this, and I always love being at the closing table if I'm able to. This is a quote from one of my clients, and as a first-time home buyer, Shikma was the best mortgage consultant we could have asked for. She took the time to explain everything and talked us through the process, leaving no stone unturned. Overall, Shikma was wonderful, and I'm really proud of that, and it means the world to me when my clients say that about the process and working with me. So in just a minute, I'll take any questions you may have. I will send you guys the webinar replay. It will be called Webinar Replay First Time Homebuyer Crash Course in case you want to listen again, or if something you missed, or you know you want to watch it with your spouse, or anything like that. I'll also send you the checklist, the first-time homebuyer document checklist, and the upfront fees infographic that you should expect. Those upfront fees, it's really important that you are well prepared for all of these. I think it will make you a much more ready homebuyer. So if anybody has any question, I'll take it at this time. I see some question in the chat box, so I'll try to answer those as well. But again, if you want to get pre-qualified, shikmarubin.com/ADP, or you can contact me. Here's my email, shikma.s.rubin@tidewaterhomefunding.com, and this is my cell phone number, 757-490-4726. So let me see what some of the questions are. Give me 1 minute. Okay, so somebody asked, does income include bonuses or commission, or is it only the flat salary? So yes, it can include bonus and commission. We for those, we want to make sure that you have been receiving the bonus and commission for 2 years. So we in the mortgage world, I always say 2 is the magic number. We want to see 2 of everything: 2 years tax returns, 2 years W-2s. We want to see 2-year employment. So that commission and bonuses, we want to make sure that you've been receiving it for 2 years and it's projected to continue. Um, let me see. Somebody else asked, would these fees be separate? Oh, I think they meant the closing cost. Would those closing costs be separate from the $100 upfront promotion fee you offer? And do you have the approximate estimate of those fees would total be? I think you mean the closing cost fees, what they are. Usually closing cost fee tend to be between 2.5% to 4% of the total sales price, and it depends on how much house you buy. So typically, if the house is you're buying a higher sales price, that percentage would be a little smaller. If it's lower, then your closing cost would be closer to that 4%, but that's usually typically what it is, between 2.5 to 4% closing costs. Oh, okay. Somebody asked, I just scheduled a pre-qualification appointment. What documents should I have ready when we talk? I'm going to send that to you. It includes some of your tax returns, pay stubs, bank statements. I'm going to send you guys the full list after the webinar, so make sure you watch out for that. Somebody asked, do you also specialize in both USDA home loans and the North Carolina first-time home buyer down payment assistance grant? Yes, yes to both. The USDA loan is a great loan. I didn't cover it, but I can just mention a few words about it. It's also a zero down payment option. They do have income limits on that mortgage, so you have to make below, your household has to make below a certain amount. So and the property has to qualify, meaning it has to be in a USDA targeted area. So there's a lot of pieces to that, but if you are interested in what I call living off the grid per se, it can be a really great option, and if you want, you can shoot me an email and I'll give you more information about that. It's a great loan program, and I have done those before too. I got lots of questions, so I'm trying to go one by one. If you give me just a moment. Okay, somebody asked, for a first-time homebuyer who is interested in doing a fixer-upper, what are some of the recommendations to look for, to be wary of? So, it's really a good question, and a lot of people, first-time homebuyers, are interested in the fixer-uppers. They want to put their, sweat, blood, and tears into the property, what is known as sweat equity, and so there are loan programs for that. It is called, there's two actually. One is a conventional loan, one is a FHA loan, and basically you can finance the renovation cost into your mortgage. So it's, again, a great program because you don't have to necessarily come up with the cash to do the renovation. You can finance it and then still bring the low 3.5% to 5%. I'll take one more question, and then or I'll see what else. There's some other question. Um, I'm trying to read all of them. Hold on, give me just a second. How often somebody asked, well, how often does the amount you are pre-approved for different from the amount you're officially approved for? Um, that is uh, rarely is it different. If you do not get it, if you are not approved for that amount that you've been approved pre-approved for, then something they didn't calculate your income correctly. And if there's an issue about how your income is calculated or um, something like that, then it should be seen by an underwriter beforehand, I would say. So I would say it's very rare. And also, unless you open any new credit, then it should still be the same. So it's a really good question. Um, oh, this is a great question. If you have purchased a home previously, at what point or after how many years will you be considered a first-time home buyer again? That is a great question. Thank you for asking that. It is 3 years. So if you haven't owned a home in 3 years, you are technically considered a first-time home buyer. So great question. Um, there's other questions here. How long does a pre-qualification last? Usually lasts about 4 months. And then if you decide to buy after that, it's usually we have to re-pull your credit. If you're months away from buying, I would say get pre-qualified now, know what you need to work on, and when you really are ready to start looking, let's repull everything again. Let's get new documents again. And again, the website is shikmarubin.com/ADP. We can get you pre-qualified. Also, how long do you need to show employment history or time in role? We want to see employment history of 2 years. Education counts as employment history. So if you've been in school, that can count towards that 2 years. But we want to make sure you've been in the role for a few months and the it's going to continue for the foreseeable future. The one thing to note is that lenders want to see consistency. That's why they ask for 2 years, and they also want to make sure, hey, for the foreseeable future, nothing is going to change, only going to get better. So that's a really good question. Um, um, I'm trying. There's a lot of questions here. You guys are great. Um, There's a question here. Are you required to have an escrow account with FHA loan? The answer is yes. Most all loan programs are required to have your taxes and insurance escrowed. If you are really adamant about not having that escrow for one reason or another, that depends on the lender. Typically, they all requirement. Usually, if you're really against it, they may increase your rate because they see it more as a risk, because now they're relying on you to pay those taxes and your insurance. And if you are escrowing that, it's a less risk for the lender because they know it's on them to make that payment on your behalf. So that's why they're protected in that way. Um, do they look at FICO scores? Yes, they do. Every loan program looks at your credit scores, and usually um, the minimum credit score again is a 620 for most loan programs. Conventional require a little higher, at 660 to 680, depending on other factors. So great question. How long does a bankruptcy fare when purchasing if you're thinking about filing? Different loan programs again are considering different things. Right now, I think FHA, you can apply for a mortgage after 2 years of bankruptcy, but you have to show that you have reestablished good credit since the bankruptcy. So after you file, if you file and they want to make sure that, hey, everything since the bankruptcy is clean. So make sure you make your payments on time, that you don't go crazy opening credit cards and other loans. But that's the requirements on that. Um, Somebody asked, if you get pre-approved, can you lock in the rate? So you can lock in the rate when you have a property, because the property is tied to the rate. So that's a great question. There is one program where you can, we call it shop and lock, where you can lock in the rate and then go ahead and start shopping. But um, you know, we can discuss if that's a good option for you or not. Again, you can shoot me an email or register for us to talk on the phone, and we can talk about those options for you. If I don't answer your question, I promise I'm gonna shoot you a personal email answering questions here in a little bit. So I promise to get to you one way or another with the answers on your questions. So, and feel free, if you don't want to ask here, write me an email. You can call me, or you can schedule a time to talk. I'm happy to do all three. So I'll answer one more question, then I'll let you guys go, because I know that you're probably on your lunch and need to get back to work. So let me see what other. Does the down payment act as a factor that is included in the loan approval process? The answer is yes. So the Yes, we want to know where the down payment is coming from, how much you're putting, because that may affect which loan programs you may qualify for. The other thing is that some of the loan programs, if you are getting a gift from a family member or something like that, or the first time homebuyer grants, which they do exist. We want to make sure where that money is coming from. So it is a factor, and that's one of the things that we're going to talk about when we get you pre-qualified. We want to see how much you're pre-qualified for, how much you will need for a down payment based on the house you want to buy, so you're prepared. So even if you're a few months away, you'll know, hey, I need to set X amount in order to buy the house of my dreams. So that's why we want to do that. So again, feel free. These are all really, really great questions. You guys were a great audience, and I'm really glad that you guys joined today. I'm sorry about that little electrical hiccup we had a few minutes ago, but if you have any questions, feel free to reach out to me. I'm really happy to help, and I look forward to talking to you guys. So hopefully, I hope you have the rest of a good day, and hope you found this to be useful, and have a great day, everyone. Bye.